we want to send a message that we're serious about the policy objectives and the policy targets agreement in terms of future average inflation being near the 2% target midpoint. This is an economy that's growing at over 3% at this point. Our forecast suggests that it'll probably slow to around 3% next year, and a little bit less, maybe around 2.25% the following year. That slowdown's partly due to the fact that we'll be likely raising interest rates, and as I've said, by perhaps 2.25% over that period. Well, the band is 1 to 3%, but we would like to keep inflation close to the 2% midpoint. I mean, when we introduced the LVR regime, we really wanted to try and keep this as simple as possible to reduce the potential for distortions and unintended effects. So if you take total mortgage lending, it's roughly around $4.5 billion a month. So high LVR construction loans were probably around about $45 million a month. When we talked to the banks during the consultation period in July, we didn't get feedback that this was a significant issue. The banks didn't raise it as a significant issue, and when we consulted with the building industry, we also didn't get feedback that this was a significant issue. And we felt that the banks could potentially meet this demand from within the 10% speed limit. And we were watching building permits, and they were starting to pick up quite strongly. If you take building permits now, they're about 50% above the trough in 2011. So we put all that together and said let's proceed with as simple a system as we can. And then we got feedback from the building industry, I think, which was very helpful, and also some of the banks themselves started talking about the issue, and we felt that it was a sensible thing to look at the issue again, particularly if this would increase the potential supply response. See that, John?
Yeah, and we've been watching the terms of trade, particularly the commodity price aspect of that for quite some time, noting that they're at 40-year highs. And every time you see something at 40-year highs, you ask the natural question, could this stay this way? And so we've got a usual assumption that they'll ease back somewhat. But when you start watching the current dairy prices and the various auctions, note that the near-term prospects still look very, very positive. And so then we can, it could well last, this cycle could well last a lot longer. And the natural consequence would be that would deliver more incomes in the economy, it would create more spending power at a time the economy is starting to recover anyway. And so that the monetary policy response would then be higher to try and spread that benefit across a longer time horizon. If you've got a mortgage, you have to factor that into the prospects about what you're paying. But of course, in general, this would be good news for the country. This would be higher incomes. And to the extent that you benefit with higher incomes, then you can afford that mortgage. So I think people do need to plan for this type of contingency when they do take out a mortgage.